All right, let's talk about the global economy in 2026. Is it going to be a boom, a bust, or something totally different? To figure out where we're headed, we actually have to look back at a year when pretty much every expert got it completely wrong.
It's the one question that keeps economists up at night. What if everyone's wrong? What if the thing that all the experts are predicting just doesn't happen?
Well, in 2025, that's exactly what went down. Everyone was bracing for a slump, right? Trade tensions were high, nobody knew what was happening with policy, a slowdown seemed like a sure thing. But nope, the global economy just kept chugging along. It was incredibly resilient. So the big question is, how? And what in the world does that surprise boom tell us about the year we're in now?
Okay, so let's dig into that surprising rebound in 2025. Because to get a handle on what's coming, we have to understand what just happened. So what was the secret sauce here? What fueled this unexpected boom? Well, the World Bank points to a few key things. First up, a massive surge in AI spending. That injected a ton of cash and optimism into the system. Then, you had companies stockpiling goods like crazy to get ahead of new tariffs. On top of that, our global supply chains, turns out they were way more adaptable than anyone gave them credit for. And finally, financial conditions were pretty easy. Basically, money was flowing and investors were feeling good.
But here's the thing. That strong headline number, it's hiding a much messier reality. This recovery was absolutely not for everyone.
And this is where you can really see it. Look at the recovery for advanced economies. It's a classic, strong V-shape, bouncing right back. But then look over at the emerging and developing economies. It's a completely different story. The rebound is so much weaker, almost stalling out. It's like we're looking at two different economies, pulling in completely opposite directions.
Let's put some hard numbers on this, because it's pretty staggering. In the wealthier, advanced economies, almost 90% have bounced back past their pre-pandemic income levels. But for the emerging and developing economies, what we call EMDs, over a quarter of them are still poorer than they were before. Their growth is lagging, way behind where it should be. And this is the key takeaway. The gap between the world's rich and poor countries, it's getting wider.
The World Bank really summed it up perfectly. They said, yeah, this is the strongest recovery from a global recession in over 60 years. But, and this is a huge but, that strength is masking a sharp divergence. That's their term for this growing, troubling divide.
Okay, so with all that as a backdrop, where do we go from here? What's the outlook for 2026? Well, the general consensus is a slowdown. Why? Pretty simple, really. All those one-off things that propped up 2025, they're starting to fade away.
So here's the magic number. The baseline forecast from the World Bank, 2.6% global growth for 2026. Now, that's just a slight dip from the 2.7% we saw last year. So we're not talking about a crash here, but it's definitely a downshift. The economy is tapping the brakes a bit.
And you can see that cooling trend pretty much everywhere. Growth is expected to slow down in both advanced economies and in emerging markets. The big why is that the stockpiling spree is over, and now the bill for those higher tariffs is coming due. You could say the tailwinds that pushed us forward in 2025 are turning into headwinds for 2026.
But remember, that 2.6% is just the baseline. It's what most people think will happen. And if 2025 taught us anything, it's that the consensus can be spectacularly wrong. So, let's explore the other paths we could take.
I love this analogy. Think of the global economy at a fork in the road. The main path, straight ahead, is that gentle slowdown we just talked about. But there are a couple of other trails branching off, and they lead to some very, very different places.
The World Gold Council actually mapped out 4 possibilities. You've got the baseline, which we already covered. Then there's a scenario they call a shallow slip. That's where things get a little worse. Then there's the doom loop. Yeah, that's where things get a lot worse. And on the flip side, you have the sunny scenario, the reflation return. Let's walk through each of these.
Okay, first up, the shallow slip. In this world, the economy just loses steam. The job market in the US starts to look a little soft, companies aren't making as much profit, so everyday people get a bit nervous and start spending less. That causes a mild slowdown around the world, and you see central banks stepping in to cut interest rates, trying to give things a jolt.
All right, now for the scary one, the doom loop. This is the absolute nightmare scenario. Imagine a major geopolitical shock or trade wars that just explode. Confidence is shattered. And here's the key. Businesses and people stop spending, not because they're broke, but because they're terrified of what's coming next.
That fear feeds on itself, creating this vicious downward spiral that could tip the whole world into a really deep recession.
But hey, it's not all doom and gloom. There's also the reflation return. This is the surprise on the upside. It's when stimulus policies work even better than expected. Growth just takes off. But that success comes with its own problem. Inflation comes roaring back. So then central banks have to step on the brakes and hike interest rates to stop things from boiling over.
So how do we get a feel for what these different futures would be like? This is a really clever way to look at it, using gold as a kind of economic barometer. In that doom loop scenario, everyone's scared, so they run to a safe asset like gold, and its price could soar. In the shallow slip, you see a smaller jump. But in that optimistic reflation return, the economy's booming, interest rates are high, so investors would likely sell gold to chase better returns elsewhere. It's a really interesting way to measure the fear level of each scenario.
Okay, so we've talked about slowdowns, doom loops, reflation, all this big picture economic stuff. But what does it actually mean? Why should you or I care about any of this?
It matters because of this number, 1.2 billion.
That is the number of young people, an absolutely mind-boggling number, set to join the workforce in emerging markets by 2035. And for them, for that generation, the difference between a global slowdown and real, sustainable growth, well, it's not just a number on a spreadsheet. It is literally the difference between having a future filled with opportunity or one with none at all. This is, without a doubt, the single biggest economic challenge of our lifetime.
And that brings us right back to that fork in the road. We're coming off a year of surprise strength, but it was a strength that covered up some really deep problems. The road ahead